Hey there, everybody. It's Mark Kepp with CampgroundViews.com. Today, I've got a special guest with me, Michael Elliott from Camp and Park Accounting. He's done the homework. He's researched these new bailout bills that have been passed by Congress, and he's come on to explain to us what you need to look for as you're going through this process. And the reality is, you should be working on this process right now. So, Michael, thank you for joining me.
Thanks, Mark. Good morning, everyone.
So, you have a lot of information. I'll let you go ahead and dive in and lead us through this conversation.
Sure. So today we're going to talk about the CARES Act. So this is the bill that was just passed on Friday of last week by the House of Representatives, signed by the President. And this bill is an economic stabilization bill. What we're going to talk about today are the provisions that relate to small businesses. This is a really, really, really pro-small business bailout program, as opposed to some other bailout programs in the past that have been big business focused. This is very pro-small business. There's a number of opportunities in here that we think that most campgrounds and RV parks should be taking advantage of sooner rather than later. So I'm going to dive right into some of the specifics of those programs. So,
hey, and one thing, I'm going to go ahead and turn my video off. My internet's just background. Zoom's been very unstable, so I'm going to turn my video off and let you keep going. All right, but I'm still here.
All right, perfect. So the first component I want to talk about is related to the SBA, so the Small Business Administration. So there are two basic programs that are available currently as it relates to the coronavirus, this COVID-19 pandemic, and the economic impact of that on campgrounds and RV parks. So the first SBA program that's available is directly through the Small Business Administration. You apply directly through the Small Business Administration, and it is an emergency loan program. It's a similar program to what's existed in the past. Think about Hurricane Katrina, tornado ravaged areas, things like that. Folks apply when they have a loss in revenue needed to cover their operating expenditures. It's a loan program, again, that goes directly through SBA. You apply on SBA.gov website. That program is more of a typical underwriting process whereby the SBA determines your credit ability, meaning can you repay the loan. Some of those provisions were waived by the CARES Act, but it operates fundamentally as a loan program up to a 30-year term, 3.75% interest rate. The CARES Act did add a new $10,000 emergency advance on that. So if you go and you apply for the traditional economic hardship loan directly through the SBA, you can request them to forward you $10,000 payable to you within 72 hours upon them receiving your application. So that's a very interesting program and could potentially advance you some money pretty quick. That $10,000 would be yours to keep in the event that the SBA declines your loan for whatever reason. So if they decline your loan for whatever reason, it would be yours to keep. The CARES Act did away with personal guarantees on these emergency loans for loans under $200,000. My belief is that most campgrounds and RV parks would likely be applying, at least initially, for less than $200,000. So you may not have to worry about a personal guarantee on that loan. So that is the first SBA program that is currently available for RV parks and campgrounds. Now, the second one is the one that is really, really interesting, and this is exclusively new and is part of this CARES Act related to the coronavirus pandemic. So what this one is this one is called the Payment Protection Plan. Us accountants, we're calling it the PPP. So it's the Payment Protection Plan. It is designed for you as a business owner to enable you to be able to continue paying your employees in a similar way to what you've done in the past. That is the intent of the program. How it works mechanically is this. They will loan you initially 2.5 times an average month's payroll. So if you had $120,000 in payroll, you would divide that out. You get $10,000 to be an average month. If we're doing it over 12 months, it'd be $10,000. Multiplied by 2.5 times is $25,000. You would get a $25,000 loan through this program that starts initially as a loan. Now, the benefit of the PPP program is that much or all of this loan is likely to be forgiven, turning the loan into a grant or free money. Basically, you'll have the ability to get this money to help support your business and likely will not have to repay it. I'll talk about some of those provisions and things like that here in a second. Interesting to note, in this payment protection plan, it is not directly through the SBA. The SBA backs it, meaning it's 100% guaranteed by the federal government, but it is administered through your local bank. So you're going to go to your local bank who's eligible to do SBA lending, and they're increasing the number of banks eligible to be able to do SBA lending. But you're going to go to your bank. They're going to be able to give you should be a fairly short, quick application for you to be able to apply for this dollar amount. So in our example, $25,000, it would be given to you directly from your bank. And then once that loan is forgiven on the back end, you then don't owe your local bank anything. There are no application fees. There are no prepayment penalties. This is a fantastic plan. In addition to that, your local bank has almost no underwriting requirements to give you this loan. They have to prove two things. One, that you were in existence on February 15th of 2020. That doesn't mean your park was open. It means you existed. And so for most of you, that's going to be the case. And the second thing is that you had payroll. You had compensation that you were paying, which would make you eligible to be able to obtain this loan. Once you obtain the loan, which should be fairly easy, it should be a fairly quick process, especially if you're applying here pretty quickly. We then have a 2-month period of time, 8 weeks from the day you get the loan, to be able to use those dollars for eligible expenditures. Eligible expenditures include payroll expenses. It includes utility costs, mortgage interest on the fixed debt that you may have, and rent payments. So if you're in a rent arrangement, it would include those as well. If those loan dollars are used for those eligible expenditures, then you will likely be able to have the loan forgiven, turned into a grant. There are requirements, however. The requirements are this: you have to have the same number of full-time equivalent employees during that 8-week period of time that you did in an equivalent 8-week period of time looking back. Now, there's several options on which look-back period to use, and it kind of gets into some pretty nitty-gritty specifics. And I guess I should have added this caveat right at the beginning. A lot of the decisions relative to the CARES Act are going to be highly specific and specialized to your individual situation, your individual circumstance. Our advice is always talk to your CPA, your accountant, potentially your lawyer, to be able to get their advice and their opinion, your banker probably, to make sure that these plans and programs are appropriate for you, because there's a lot of options. We're going through right now working with each of our parks. I've spent the whole morning so far going through each of my parks and looking at all of the programs, the PPP, the emergency loan programs, and a couple other ones we're going to talk about, to try to game plan out for each specific park that I work with, what is the best option for them? How can they maximize the return on these various bailout type of programs? Should they be looking at unemployment? Should they be looking at a lot of different things? And we'll kind of keep going into that. So on this loan forgiveness specifically, you're going to be calculating full-time equivalents, assuming you've got the same number this year that you did in the prior year. Likely that loan, as it relates to the PPP program, will be forgiven. I was on a conference call with a group of CPAs yesterday, brainstorming ways that we can help implement the CARES Act for our clients and kind of best practices on what the CPA community is looking at as it relates to the CARE Act. And a statement was made by someone that said, I don't know who wouldn't take advantage of the PPP program. It is such a phenomenal program that offers a ton of flexibility, that offers, and it's just a really good program that encourages employers to keep their employees working. So for a lot of you, your parks, you may not be open, right? You may not be able to be open, but you may be able to bring some of those employees back who can work in your park, kind of help you do some projects that you've been wanting to get done and things like that, and frankly have the government pay for it for a 2-month period of time. It's honestly likely to be a win-win situation. And I realize that even though we're in kind of a very scary, kind of a lot of unknowns, this program could provide an opportunity for you at your park to be able to accomplish some things that otherwise you may not have been able to accomplish. Yes, I'm looking for silver linings, but these days we've got to look for the silver linings to keep our heads up. So on the PPP side, fantastic program. Please talk to your business advisor ASAP. The loan applications should be available on Friday. I was talking to a client yesterday whose bank already had a sort of application live online. I don't think it was a legitimate application, but they were already gathering the data so that as soon as this application goes live with the government through the banks on Friday, is what we're told, they're ready to roll. So we think you need to take advantage of this. You know, today is Tuesday, the 31st of March. We think you need to take advantage of this. Contact your local banker, contact an SBA lender. If you don't have one, don't know how to find one, there's resources on the SBA.gov website to help you find one. Reach out to me. I can put you in contact with some SBA lenders. But there's a lot of folks out there who can help you to take advantage of this program. The PPP program is going to benefit the vast majority of campgrounds and RV parks based on the analysis that we've done so far.
So let me ask you a question on that. So there are a lot of parks, and we're also talking to like folks that own Airbnbs and, you know, the outdoor recreation space in general. They don't have employees, but they have themselves. Does it count for them?
Good question. So the answer is yes. So the CARES Act specifically allows a couple of things. It does not exclude, let's put it this way, it does not exclude monies paid to the owner. So if you pay yourself payroll as an owner, you are included in the calculation of forgiveness. So if you're a bona fide W-2 employee of your business, you're qualified. Now, if you're a sole proprietor, someone who receives net profit distributions from your business, those are likely to also be included depending on how your business is structured. There's some caveats and different things in there. We want to be cautious with some of the calculations, but in general, self-employed individuals are not excluded. We would have anticipated them to be excluded. That's how a lot of these other programs in the past have been worded. But in this program, they're specifically not excluded. In fact, they're actually specifically included. There's just some caveats and different things we have to be cautious with relative to how the compensation is structured and things like that.
So this program, you call it PP, triple P program. It's designed, and you said it already, but let's repeat it. It's designed to keep people employed, keep them off unemployment, keep them on your payroll as a business owner. So the amount of money is 2.5 times your average monthly payroll, meaning that you basically giving you enough money to pay your employees for 2 months, plus a half amount to cover your utilities and your mortgage interest and stuff like that. Correct?
That's correct. Yeah, and again, if your park is open, if you're allowed to be open to maintain your park or whatever the reason, and perhaps you're not allowed to have guests, this could be an opportunity where normally you wouldn't have an employee, you would just simply lay them off. You have the ability to pay them, not out of your pocket, but we have the ability to take advantage of these funds and potentially continue to have them working on projects and things. I talked to a park yesterday that was like, hey, I've got some maintenance guys that I had to lay off. This program is going to allow me to rehire my 2 maintenance guys, which will allow me to get the park to a place where, hey, I probably wouldn't have been able to get to because if there were people here and different things like that. So they were chalking this up to like, hey, maybe the revenue's not going to be there and the season's not going to be as great as we wanted, but we're going to accomplish some projects and things that we otherwise would not have been able to. So there are opportunities inside of this to really help your park long term.
So say worst case, I mean, one of the fears folks would be having is they're borrowing this money and everything falls apart and they're not able to open the season and keep those employees on. Is there any provisions in there where after that 2-month period, if for whatever reason they have to lay those folks off then, are they going to get in trouble, or are they okay as long as they pay those bills during that 2 months?
No, there's no trouble. So you're going to get, for the PPP side, you're going to get this loan, assuming you use the expenditures for, eligible purposes and you meet the FTE requirements and all this. It's going to get forgiven at the end of the 2-month period of time. If your park is still not able to open for whatever reason, you could lay those employees off. And in fact, as I'm doing some planning, there's actually, we recommend all of our parks to do kind of, to do cash flow planning on the assumption of like, hey, for the next, what if you're closed for 30 days? What if you're closed for 60 days? What if you're closed for 90 days? And so as I'm looking long-term at some of my parks, I'm doing some kind of like worst case scenario planning and being like, okay, well, what if the season is lost, right? So what if I'm a park in the Midwest who loses my entire season because the lockdown goes through September, right? And so what I'm doing is I'm saying, okay, if that is the situation, what do I need to do today to plan for that? And so I'm looking at things like, hey, I'm going to take this PPP plan for 2 months, right? And then I might go and get an emergency grant to potentially cover 60 days. But one of the options is that we're strongly looking at is we're saying, hey, maybe we take advantage of the PPP for 2 months. And then if on July 1st, this place, we're all still shut down, maybe we lay people off because there's some really good unemployment benefits baked into the CARES Act. And so maybe we take advantage of that expanded unemployment for 30 days, and then we're sitting at August 1st, and then we can make some decisions about what we need to do. So absolutely, this does not harm your ability to lay folks off after that 8-week period of time. If that's what it takes, you'll still have the ability to do that.
Perfect. Okay, that sounds good. So that makes it really clear. And when we go back to the emergency disaster loan program, that $10,000 grant, there's provisions in that. So if you apply for that $10,000, it actually then if you then apply for this triple P program and get that money can be applied to it. There's some special rules on those things. So one doesn't necessarily exclude the other. I know that was some confusion earlier this week that one excluded the other. They're aware of one another, but there are some provisions in it that you can't double dip. You can't get double
Correct. So for the emergency loan and the PPP program, if you apply for both, they can't cover the same expenditures, meaning the PPP needs to be allocated to these expenses, let's say 2 months of payroll and some utilities. The emergency loan needs to apply to payroll expenses after that 2 months, other fixed debt you have, maybe mortgage payments and things like that. They can't cover the same period of time. Now, as part of the emergency loan, which you referenced, this $10,000 advance grant that they give you, if you get that, and everybody's likely to get that, if you're given that $10,000 within 72 hours, and then you go and apply for the PPP, that $10,000 will count towards the amount that's forgiven, meaning you don't get to double dip. So if your PPP is $25,000 and you've already been given $10,000, they're only going to allow you to have $15,000 additional dollars forgiven. It's going to be up to the max of that $25,000, that PPP loan. So there is a no double dipping provision inside of that.
Let me ask you on that then. Is there a potential strategy for somebody who's like an ultra small business that they could potentially get that $10,000 grant, apply for the PPP, get that full amount, and they know that, hey, that there's a certain amount that's going to be a loan, but at least they're giving themselves a financial buffer to get through this. Is there a strategy to that too, potentially for them?
Yeah, for sure. And so, but I would say it's likely to be the other way around, meaning if you need the additional loan dollars, you're likely to go the emergency loan route to get those additional loan dollars rather than via the PPP. But it's probably a 6 of one, a half a dozen of the other. But we're likely to be pushing clients more towards the emergency loan side if they qualify through, if they have a good credit score and they can repay the loan and things like that. We're likely to go that route, slightly lower interest rate, a little bit longer term. So we're likely to do the emergency loan side for additional loan dollars.
Perfect. All right, great. What other programs are available within the CARES Act?
Yeah, for sure. So a couple of things. One, if you have an existing SBA 7A loan, so some folks may have bought their parks using an SBA loan. If you have one of those, and your loan was an SBA-backed loan, depending on the type of loan that you have, you may be eligible as part of the CARES Act to have up to 6 months of your payments on your existing loan paid for, not deferred, paid for. The SBA is going to go in and make your payment for up to 6 months if you have an existing type of SBA loan. So our recommendation to all our parks right now is, well, 2 things, and I'll give you both of them. 1, you need to go talk to your banker right now. Most banks are allowing you to defer your loan payments for 60, 90 days. They're saying, hey, don't make loan payments. They're still going to accrue interest on you, but they're not going to require you to make loan payments. A lot of lenders are doing that. So that's the first thing. Ask your lender for some deferral. Likely your mortgage is one of your largest payments. Ask for some deferral. The second thing is ask your lender, if you're not sure, ask him if you have an existing SBA loan. And if so, are you eligible for the SBA to come in and make 6 months of your payments? That could be huge. So that's one program inside of the CARES Act that's an additional benefit. Another couple of things that are inside of the bill. So there's a number of individual provisions. We'll kind of stick to the business provisions here. If your business had an operating loss for whatever reason, meaning you created it because you had extra depreciation or whatever, if you had a net operating loss in 2018, 2019, or you will have one in 2020, you're going to have the ability to take that loss and apply it backwards to carry it back. This may be complicated if you're not a tax professional, but your tax person will know what I'm talking about. You'll have the ability to carry the loss back up to 5 years. Now, why would we want to do that? We would want to do that because if you had income in those prior years, you know, you sold a business, your campground made a lot of money, you sold a rental property, whatever, if you had income in those years, that loss would be able to offset that income going backwards and potentially generate a large tax refund for you, which would give you some liquidity in the near term. So that's one opportunity inside of the CARES Act is this NOL. Another one is the qualified improvement property. There was an error in the Tax Cuts and Jobs Act that made interior improvements to buildings. It made them have to be depreciated over a really long period of time. The CARES Act corrects that. So if you're doing interior remodeling to a commercial building, think about a store, potentially a bathhouse, things like that, you may have the ability to write 100% of that cost off in 1 year. And so depending if you end up having good profit this year, whatever, that may benefit you. So that's another opportunity that's here. And another great opportunity is the ability to take up to $100,000 from your qualified retirement account. So think about like an IRA, potentially a 401k. There's some rules on that, but $100,000 from a qualified retirement account, not pay a penalty on it when you take it out. There's normally a 10% penalty, not pay the penalty. So the penalty is waived, and you have up to 3 years to use that money before you have to put it back and pay taxes. Meaning if you take $100,000 out, no penalty, and you have up to 3 years to pay the taxes on that. So potentially borrowing it from your own retirement account today, knowing that you've got 3 years to pay it back before you've got to pay taxes on it. That's another opportunity to sort of self-finance your way through this economic downturn. And again, we're not sure how long this is going to last, but if you start getting into this, you're starting to run out of loan opportunities, your deferrals are ending and things like that. This may be a really good opportunity for you to provide some self-liquidity in the event that you can't get other outside lending. And that is the bulk of the provisions that we're pushing and looking for our campgrounds and RV parks. But again, I really recommend you to sit down with your professional today, jump on the phone and say, hey, let's game plan what we need to do over the next 30, 60, 90 days. As some of these programs we need to take advantage of today, because the longer we wait to take advantage of these programs, the longer we wait after they open, the more difficult it's likely to be for quite a while to be able to get quick turnarounds, quick funding, because they're just going to be inundated. Again, specifically with this PPP program, almost every small business in the United States is going to qualify for this. Almost everyone. Now, not everyone is going to get it forgiven. Most will, but everyone's going to qualify. and it is very popular in the news and the media right now. And so they're going to be simply inundated starting on Friday when these applications get released. Talk to your banker, your accountant, your professional to see if this is something you should really take a look at.
His name is Michael Elliott. His business is Camp and Park Accounting. He's a member of our Facebook group and a great resource for you as an outdoor destination. If you need help, how do they reach you, Michael?
Sure. Just shoot me an email, michael@campandparkaccounting.com, or just go to our website, campandparkaccounting.com. If you have any questions you want to bounce ideas off of, feel free to shoot me a note. We'll jump on a call. No sales pitch from me. We're just wanting to help out the campground and RV park ecosystem right now in any way that we can. So if you have any questions, please feel free to reach out. Drop a comment below the video in the Facebook group. I'll be interacting there throughout the day as well. So if you have questions, please feel free to reach out.
Thank you for your time today, Michael. Goodbye.
Thanks, Mark.